Good evening and welcome to this webinar, this Wednesday's webinar with Sarit Harper. This is the second webinar in the series about how to learn to trade Forex. And 1 week ago, we had a very inspiring session with Sarit. And I'm quite happy that we're going to have this one and another one in 1 week, so we can learn more about Sarit's system to trade Forex. I think I'll just leave the microphone to Sarit, and welcome Sarit once again. Looking forward to tonight and another presentation.
Thank you, Christian. Thanks for having me once again. It's a real pleasure to be here. There we are. I think everything should be rolling. Yeah, it's a good pleasure. It's a real pleasure to be here once again. I really enjoy these opportunities to talk about stuff that I think is quite exciting. Trading being one of them. So I'm thrilled that we can talk about more trading again today. And we're gonna take some of the stuff that we spoke about last time, so the buy and the sell zone theory, and we're gonna build a little bit on that. And I'm gonna show some cool techniques, or a cool technique that you can use to help you even more. And this technique is called boxing, just like boxing. And you'll understand why when I discuss it. And it just helps. It helps kind of explain, I suppose, or helps people to see the difference between parent and child supply and demand. But we'll get into that in just a second. So I'm just going to run this presentation. It's a very short one today, and we're going to hit the charts pretty early on. Presentation, slideshow. I had to reinstall my computer a couple of days ago, so everything is in a new location. Okay, here we are. So I hope everyone can see my my slides. So the agenda is what is a buy or a sell zone, and we touched on a lot of that during the last webinar. And if anybody here tonight didn't attend the last webinar, then I recommend that you go and you watch that. And then today's material will make a little bit more sense. But even if you haven't, I think you'll be able to understand and follow along with what we're talking about. We're going to talk about what buy and sell zones are telling us. Again, this is a little bit of repetition, how we can find them. And then we're going to dive into the concept of parent and child supply and demand. And this is a concept that I started using several years ago. And this just essentially has been chosen to emphasize the fact that there is a relationship between supply and demand. We can have parent supply and demand, and we can have child supply and demand. So we're going to dive into that as well a little bit. Then we're going to get to boxing. Boxing is a really cool, simple technique. Nothing fancy, but it forces your attention on a certain part of the chart that you should be focusing on when you're buying, and the other part of the chart that you should be focusing on when you should be selling. And it's just a really nice way to help drive this point home. And the great thing about boxing is that it forces you to sit on your hands, because sometimes you're looking for a trade. Oh, I want to get into the trade, or I want to buy, or I want to sell, or whatever, looking for some entertainment. Well, boxing will force you to sit on your hands until things are just right. Then we'll have some final words, and then we'll open it up for some questions like we did last time. I thought that was quite nice. Okay, so what is a buy or a sell zone? Well, a buy or a sell zone is essentially, they're essentially historical prices that attractive market participants, either on the buy side or the sell side. And just like anything else, like a telephone, if you had a telephone, I've got this Chinese telephone, it's called an Oppo. I got this in Bali when I was in Bali, and I wanted this telephone because it had a cool camera. I didn't go to the shop and just buy it at the price. I wanted to make sure that I got a good deal. And so I started to look in brochures on the island and find out who could get this telephone for a good price. And then I found the price and I bought it when it was on sale. And the same thing applies for trading. Okay, so you want to find these buy and sell zones. You want to find those really attractive price windows where people are going to start buying telephones, or the American dollar, Swiss franc, or the Tesla stock, or whatever it might be. Okay, and they're essentially these price levels where the number of transactions increased either to buy or to sell. Because when you're advertising cheap prices, I mean, people are going to get into the market either to buy or to sell. If you have these really high prices, like we've seen in a lot of the crypto space, where a lot of people are thinking, wow, man, these prices are so high. I think it's time that maybe I cashed in a little bit. And so the sellers are looking to take their money off the table, while these prices are still really high. And also we're pulling these willing buyers and sellers into the market. Excuse me, because they can be sitting there on the sidelines waiting, and you can't see that until you enter these buy and sell zones. And this is when the magic occurs. Okay. So what do they tell us? What is a buy and a sell zone telling us? Well, they're telling us where we have buying and selling, as we spoke about. They're also telling us where we have potential imbalances in supply and demand. And this is where you have like a sideways period where you have a balance in supply and demand, where the flows are moving equally from one side of the market to the other. We have an agreement, people are happily buying and selling. Then all of a sudden price goes up. What does that mean? Well, that means that there was a lot more buying than there was selling. And this is called a price imbalance, also referred to as a price inefficiency. And the reason it's inefficient is because when price goes up like this, well, then there's what's known as a liquidity void in the wake of the move. And this leaves a lot of inefficient pools of liquidity. And so when it goes up like this, price normally likes to come down and rebalance that, price returns to the origin of the move. And this is where price, like the trade, gets really loaded. So we show interest, we buy. Okay, maybe people start taking some profit. Price bleeds back down again, as it almost always does, to rebalance price, to rebalance the price inefficiency. And this is when the real buying and selling begins. Okay, and so when you have a buy and a sell zone, we went into great detail on this in the last webinar. Once price moves below the buy zone, and this is a really attractive price, and typically you'll have an area on the chart where you'll have like an area of demand, and the buy zone will typically be above it. Sometimes it's just at it, but sometimes it's just above it. And so the area between the bottom of the area of demand and the low of the the buy zone, that's a really attractive price window. And once price starts to poke into there, this is when people sitting on the sidelines are drawn into the market. Okay, good. Sorry, let me turn off. I thought I had my messaging. Turn all this off. Sorry about that. Slideshow. Okay. And also, when you consider the buy zones, when you can see a buy zone, when you know where the buy zone is located, then you know what the most expensive price that you're willing to pay for that asset. And that's really nice to know, because you can see when you've had historical area of value, and if price leaves all of a sudden, then obviously it's expensive. And so when you can see as a buy zone that's being established, well, this enables you to sit on your hands and wait. And you say, well, I'm not going to buy this asset until we get below this point, and then I'm interested. Okay, so it becomes like it's very visual as well, as we'll see. And so how can you find them? Well, you can use the software. And the two trades that we discussed a couple of days ago, we use the software to find those. Okay, you can perform a buy and sell zone analysis, and this we did a lot during the last webinar. We'll also do it today. You can ask questions, and these are the same questions that we referred to from the last webinar. And where did price retreat from? Where did price go from? And this is a really important one. Which supply and demand consumed opposing supply and demand? This is really, really important. And the reason I say this is because if you consider the currency market, the currency market itself is highly decentralized and highly distributed. It's everywhere. Okay, not like the gold market, which goes through a central exchange. The FX market is very decentralized. And this essentially means that you have hundreds, if not thousands, of market makers who are creating their own market. Okay, so they buy liquidity from a liquidity provider, they create their market, and they offer this market to retail people like myself and like yourselves. Okay, and this makes it very difficult to use volume information when making trading decisions related to Forex, because you can see, if you look at a gold chart and you look at the volume, you can gauge who's buying and who's selling and how much is being bought and sold. But if I'm trading through broker A, I can only see the volume information that is relevant for that broker in particular, no one else's. And so banking on that volume information alone can be quite bad. Why? Because if you read in the terms and conditions, or you read in some of the statistics that the broker is obliged to show to people who sign up, they'll tell you that normally, I think the going rate is about 78 or 83% of the people, 80 on an average, 80% of the people who they have of customers are losing money. So if you're making trading decision based on losing traders volume data, I mean, I think all you'd have to do is take a contrarian position and you would be in the money. And so you have to be aware of that. And so that's why it's just not a very good idea to use volume in relation to currency trading. Okay, so let's have a look at some price charts just to help drive this point home once again. So we had, so let's go to this trade here. This is the one that's closed. Okay, so if we look at this, I mean, we bought down there. Why did we buy down there? Well, let's have a look on the weekly chart, which is actually what this trade was based on. I mean, the software found this. Let's delete this. So the software found this box off here. And this is an interesting price window for us. Why? Because the last time, rather when price left this area, we managed to move above this high. This is a weekly chart, so this is, I mean, there's a lot of clout in the information that you can see on the weekly chart. This is actually my favorite chart. And the reason I like it the most is because what's happening on the weekly chart is not a lie. This is the truth. This is massive information available to us on one price chart. So when you can see the prices going down, or when you can see prices reacting at a weekly demand, well, then price is going to go up. Okay, and if you're a shorter term trader, I mean, doing anything but buying right now would be very expensive. And so just being mindful of the fact that we're bouncing off this area of weekly demand, we know we only want to be buying. So I always start my analysis on the weekly chart. Okay, so let's have a look now. I mean, why this area is interesting. Well, we had this area here. And as you may recall from the last webinar, I talked about the concept of a slingshot. And the slingshot is simply where you have price leaving and then price being pulled back, like you pull the slingshot back, like a pullback, and then it snaps down. Okay, so this is the slingshot. Price left, the slingshot was pulled back, then it went down, and price moved below these lows here, which is very important. We had this low here, price kind of traded up to above the lows of these 2 weeks of trading, which is, I mean, these are, as we also spoke about, wicks are essentially arrows. They're pointing to something. They're saying your attention should be here, please. And so it's telling us that we have something that's quite important here. I mean, look at this. Price went down to this level and it left. Years later, price came down to here. It bounced exactly to the same level and then it left. Price came down, but we went up. Okay, so this area here did not cause price to move through because what price tried to go through, but then we came back up. This area here is the one that caused price to trade. Okay, so we showed an interest to sell, price rallied, we advertised these higher prices. What does that encourage people to do? To sell. Price started to break down, so people were convinced on the small time frames, okay, price is selling off, so we're selling, we're buying American dollars. Sorry, we're shorting the American dollar Swiss franc. Okay, price goes down, price comes up, the slingshot is pulled back almost exactly to that area, and then we leave. So this becomes the sell zone at this area of supply. But notice now that this area of supply has been consumed by this area of demand. This is telling us that we have strength in this area here. Now, if I was looking at volume information, I can, as you can see here, the volume information that I can see here is only relevant for my brokers, so it's completely uninteresting to me. So I won't look at that. But what I will look at is I'll look for areas of supply and demand that are strong enough to consume opposing supply and demand. And when this is happening on the weekly chart, I mean, this is shirt-tearing strength, enormous strength. Okay, so now we're leaving here. And we saw this and we thought, wow, that would be a remarkable place to buy. Why? This is a beautiful area of demand. We had 2 weeks of buying away from this area. Price has not been back since that. This is something I also talk a lot about, and that is when you have this candle, and this candle, okay, and the body of this candle is in the range of the previous, the body of this is in the range of this candle, and then this candle and this candle are not related, and this candle and this candle, they are not related either. Okay, so we have 3 accumulation candles on this weekly chart. Okay, and so when price tears away from that, this is telling us that we tried to buy, we failed, we tried to buy again, we failed, once more we failed, but this week price left. That is telling us that we have enormous buying going on from this price level. Okay, and so this is where we look to buy, and we put our order in at 89.89. And if we look at the low of this candle, where's that tool here? 89.89. The low of this candle is 89.85. 89.85. So we had 4 pips of slippage, drawdown on a weekly chart. That's really impressive. But you'll often see that when you're dealing with higher time frame areas that are as clean as this one is. Okay, so this is just a really good example of that. So the next question is, well, where's it going to go? Well, I don't know where it's going to go. We don't have to speculate about that. All we have to do is find a nice entry, have a reasonable risk, and get out when we find an opposing area of supply. Okay, and so we already took this one off. So let me delete all of these. Boom. Let's just put this one back on the chart. Okay, so yeah, so we got it just here. So this is the 89.89, 89.87. And it went up. We had about 100 pips on that move, which is a beautiful, beautiful move. And why did we get out of here? Well, that's because we had area tested, price tested, and we failed, and then price came down. And so we got out at a price sensitive area. So we have something up here that is interesting, that would likely cause price to have a bit of a pause. Okay, so we have this area here, price traded below these lows, not from here, but from here. So the slingshot was pulled back and then it left. And if we look at that once again, what's the highest one here? I need this one. Where is that little tool? There. So the high of this candle is 90.93. So the sell zone is there, 90.93. And so let's see where the sell zone is. So this one is high at 90.93. It's exactly the same. Okay, so this is where price goes to, and this is expected behavior. Why? Because this is where the slingshot was pulled back to before the release. So this is actually an arrow pointing to the edge of the sell zone that is within the lower perimeter of this area of hourly supply. Okay, is price going to continue higher? I think it will definitely go higher, and the reason I think that is because this is weekly demand. So we had price came down, we had lower lows, and now we rallied, we moved sideways, we moved above this high here, and now so far we're looking to respect this area here. So I'm expecting price to continue moving higher. Okay, so yeah, so that is essentially what the buy and sell zone is telling us there. If we have a look at the other trade we're in, this is the pound American dollar. See, this is a similar kind of thing, but this is a little bit more simple. Okay, and that was, in a second, the software will update. Yeah, and this area here was marked off by the supply and demand software. And we also had some information here in the asset strength histogram, which was telling us that we were very high. We're advertising very high prices. And last time, let me add some circles. My platform's all messed up because everything's been changed. So last time price was here. I don't even know how to use these. There's got to be a drawing tool here. Draw, pencil. Okay, pen. Okay, cool. So we have price is high here. It was high here. What happened? It went down. Price was low here. We went beyond the line. What happened? Price went up. The same thing here and here. Price went up. Price went up. Price is here. What's going to happen? Well, I'm thinking price will probably go down to around this area here and then continue on its journey either higher or lower. Okay, and so if I turn off the drawing, normal drawing mode. Okay, so now if we go here and we identify the sell zone here, because this is the move, let's just box this off. This is the area of supply. Okay, and so the sell zone was initially here because price left, the wicks pointing to the arrow. So this is a price sensitive area. Price came to it. We tried again and we broke down. We came back to it, and now price popped through it, and now we're coming down. Okay, and each time price tests and comes back away. Well, this is pointing to the price sensitive areas, telling us where we have attractive prices. Okay, and you can see it starts here. It started, we had another test here. Price went a little bit deeper, a little bit deeper. Price came back to it here, and now it's been removed. Okay, so the sell zone was brought all the way up to inside this 4-hour supply. And if we have a look on the 30-minute chart, you can probably see why price turned. Or maybe we grab a hold of that and move the highs right there, and we scroll to the left. Let's see if we can find out. Yeah, okay. So we can see here that price left, we went down, we failed, we went up, we had 1 push, 2 push, 3 push, and then price left. And so the area that we would expect price to turn around at is around here. Price came a little bit below it. You can see just here, and it found, we found that we had willing sellers on the sidelines who got involved, and this essentially brought price lower from here. Okay, so actually we're on this time frame here, and I have another slide because this is a really good example that we'll use for this next material. Slideshow. Okay. We're going to look at parent and child supply and demand now, because this kind of feeds into the next lesson. And so again, parent and child supply and demand, I use this terminology just to underline the fact that there is a relationship between supplies and demands. They're not all created equally. Okay, and so parent supply and demand is established independently. So if we look at an example of parent supply or demand, we look at this one here. Okay, here's a nice example, a lovely example. This one here is a parent. It was established independently of any other area. This was not established as a result of price reacting on anything else. Okay, so price rallied, we accumulated, we went up, we went down, and we poked into this area here, and then we left. Okay, price came. Where did it go to? Did it go to the parent or did it go to the child? And it went to the edge of the parent. Okay, it went into the child, which happens to move below the parent, and this is where it left from. Okay, and so this one is not demand, it's a reaction to demand. Okay, so parent, child, and you can trade children. That's politically incorrect to say, but yeah, you can trade child supply and demand, but you have to be very, very careful, and they have to be qualified carefully. When they look like this, where you have this area just here, where price left, price came back up, this was established as a result of this, and this is where price left from. This is the child, this is the parent. You could wait for price to, so I have a rectangle there already, you could wait for price to move up to here, like so, which is what happened. Price came back and then left, but price didn't get there. And you'll almost, well, you'll very, very often experience that when you see areas of supply and demand like this. Okay, because this is like the slingshotters pullback, then we have the big release. But within this release, you see this wick, This wick is telling us that we have continuation patterns in on the smaller time frame. I don't know if I have enough data, but let's try on the 50-minute chart. I'm just going to see if I can zoom to the left. MT4 brokers are notorious not to have data, enough data. Maybe we're lucky today. Okay. All right, so, okay, so price, and it's right there. So you can see price left, we move sideways, we have a continuation pattern, and then price broke away. So price, this is it right there. And if you want to get really specific about it, here we had the 3 candles like we saw on the American dollar Swiss franc. The body of this is in the range of the previous, the body of this is in the range of the previous. Is the body of this in the range of this one? No, it's not. Is the body of this in the range of this one? No. So we have a 3 candle distribution pattern. Okay, and so what you would do is you would mark this off where the entry would be at the bottom of the lowest body. So which makes it this one here. And the highest high of all of the candles is this one here. So this is the area of supply that we would expect price to trade from. So if we bounce back, okay, so if we have a look, yeah, I mean, look at all the reactions we had. We tested it and you could see the price was really looking to move away from there. We moved up, we failed, again, failed, again, failed, again, failed. We had no closes above that area. This one came all the way back down here. So when this happens, when you have price moving up and then moving down, this move down, what is it doing? It's clearing liquidity below price. And if you remember the slides we had last time, where we had, as a matter of fact, I can bring that slide up because it'd be nice too. Day trader, not that one, it's this one. So if we have a look at this graphic one more time, this one here. Okay, so when price moves up like that, it's clearing out the liquidity here, okay? And this makes it easier for price to move higher next time. Okay, so here we had a pool of liquidity, it was tested, it was filled, it was removed at this point. Price went up, came down a little bit deeper. What does that do? It clears the road, it thins out the liquidity below price. And price moving higher thins out liquidity above price. And so the next time price comes above this high, it's thin liquidity, okay? And this makes it easier for price to continue to move higher. Okay, so if we look at the price chart, I mean, when price goes up like that, and then it comes down like that, this is thinning out liquidity. It's essentially, it's clearing the road from all obstacles that would actually cause price to turn around and reverse. Okay, so here we had an area of demand, price tested it, the buy zone is established here, price went deeper. This is really good for our short scenario because each time that happens, we're clearing the table, we're flushing out liquidity below price, okay? And price goes up and we come down, we go up. And then this is a classic liquidity exploration pattern where price goes up, price moves sideways. We have a range in here. Let me try and draw that range where we have a range. It looks like this. Okay, this is our range in this particular scenario here, where price goes up, we come down, and you can see that we have the bottom edge of the box is respected here. Price goes a bit below, it's respected here. Price advertises these higher prices. And what is that doing? This is liquidity exploration. And exploration meaning we are looking for liquidity. And where is liquidity typically located? Liquidity is typically located in the market in the form of pending orders. And when price goes down like this, the retail space is saying, oh wow, price is going to sell, I'm going to start selling. Okay, but where are they going to put their stops? Well, they're going to put their stops above these swing highs. The big money, the smart money knows this, which is why they take on a contrarian position to bring price higher, to flush liquidity in the form of the stops into the market that they will then use to help facilitate the filling of the orders that they need to drive price lower. Okay, so that's what we're seeing just here. This is a typical liquidity exploration pattern. Okay, and then price slowly starts to bleed away. And then this, price returning up like this, this is again the big money squaring up their positions. So they had long positions that they took on maybe to drive price from here up to here, and they hold on to those positions, but now they're at a loss. So what do they have to do? Well, they have to buy some more to drive price higher so they can get out of the positions that they had to put into the market to buy to drive price above these highs, to dump the liquidity, to fill their orders to sell. And that happened here. And this is where you see these huge moves away. I hope that makes sense. That's kind of an all over the place explanation, but this is a very, very typical pattern. Okay, so this is just, yeah, price squaring up positions, and then the intent of the smart money unfolds, and that is to move price lower. All right, good. This is a 4-hour chart. Let's go back to the slides. Okay, cool. So we've touched upon that. So the child supply and demand is established as a result of a parent. And so this can be like we saw on that 4-hour chart example where we had that lovely continuation pattern. Price pops up, and price comes down, it tests the parent. We see a distribution of liquidity happening at that space. Okay, accumulating positions to move price high, so accumulating buy orders, and then price leaves. Okay, that accumulating of buy orders is not demand, it is a reaction to demand. Okay, parents are higher probability, children a lower probability. But as I mentioned, I showed in the previous example, you do have situations where you have these patterns occurring, like we saw where price went higher, it came lower, the slingshot is pulled back, and then it leaves. And when price leaves like that, then we have that lovely pattern. And what you can do in a situation like that is you can box off the child and the parent together as one zone. Okay, and so is there a cool technique that you can use to help differentiate between parent and child supply and demand? Well, there is indeed, and it's called boxing. Well, I called it boxing because you use boxes, as I'll show in just a second. And so boxing, I created to help simplify the concept of parent and child supply and demand. I wanted to divide and conquer. And while you can't always do that, you can certainly make it a lot easier by using boxing. Okay, it enables you to see the buy and the sell side of the move. And this is really nice because if you have a move, I'll try to do it your angle so it looks like that you're looking at the price chart. So price goes up like that. I mean, this is where the buying occurs in this leg. When price bleeds back here, there's no reason to buy in any patterns that may result as price is moving down, because price bleeding down is not going to react to any demand in here because there is none. It's only going to react to demand in the move up, okay? Because the demand is all in here. The liquidity to drive price high is all in here, actually down here at the origin. Okay, and so using boxing, it probably sounds like a very confusing concept, but it's super simple. We'll have a look in a second. Yeah, it helps mitigate confusion regarding parent and child supply and demand, and use rectangles. And I like to use green for buy side and red for sell side. Now I'll illustrate that just so it's a little bit clearer. Okay, so let's just use this as an example. I just have to disable the trend line management because I need my rectangles. They have to be not fiddled with. Okay, so we have this move here, okay? So we have this move here, goes to the high, here we go to the low, which is I think here, and then we go high again. So how would you identify the buy and the sell side of the market here? Okay, what we want to do is we want to use the rectangle, and you want to mark off from the highest high in this area to the lowest low, which is, I don't know, let's say it's around here, okay? And I'm going to change the color of this now to red because this is my sell side. I'm going to fatten up the box so it looks simple like that. Good. Okay, so this is the sell side. Now I need another one. And this other one here, I'm going to move over like so. So this is my other side of the market. I'm going to change this, the color here to forest green. Right there, boom. Okay, so here, move that over so we can see both sides. There we are. Okay, so now we have the sell side, and here we have the buy side. What does that mean? Well, that means that we are not allowed to buy at any area of quote unquote demand in this side of the box, in this red box. We're only allowed to sell. Why? Because this is the origin of this move. That means we are only selling here. We can only sell here, okay? And over here, we're not allowed to buy. We're not allowed to buy, so we're not allowed to sell anywhere here. We're not allowed to sell when price comes up to this little area. Price went down, price came up. Yeah, we had a reaction, but we'd be breaking our rules, so we're not allowed to do that. We had a box here. Are we allowed to sell there? No, we're not. This is the filter. We're filtering this out, okay? We're only buying, we're only selling, and that brings our focus. So when price is doing this, moving up like this, our attention is being brought over to this area here. And so we're being told where to buy and where to sell. And so what we want to do here is we want to look for those arrows pointing to these beautiful pools of liquidity that are telling us where we have the beginning of the sell zone. And we have that right here. Right here, another test, another test, another test, another test. And so we would mark off. You can see, sorry, let me zoom in so we can see it clearer. Just here, we had this area here. Price went up, the slingshot was pulled back, price went higher, price came down, we sat on that area, price went below this area of demand, consuming it, telling us that we have strength in this area right here. So we're going to go like that. Boom. That's the area of supply. Actually, it won't manage that now because I switched it off, so I'll have to do it manually. We'll have to move it all the way over. All the way over. Okay. We'll change this color here to, let's change it to, I don't know, Dodger blue. So we have a different color. Okay, cool. So this is the sell side. Okay. You can see price tested, sell zone, sell zone, sell zone, sell zone, sell zone, arrow, arrow. This is flashing sell here. Okay, when price starts to move up, then we can sell. You can sell in this area here, but you can only, I don't want you to misunderstand what I'm trying to explain. You can sell here, but you cannot sell at any price patterns created in this box. You can only sell in price patterns created in the red box. This one was created in the red box, so we can sell. We would sell here, okay? And where do we have another one? We have another one just here, and the software found this for us. And this was like the trade that we discussed. Christian and Eric and I discussed the other day. I'll move that one over again. It's all the way to the end, just here. Cool. We can sell this one. We can sell this one. This is the first trade. This is the second trade. Okay. And so this is essentially the idea that I refer to as boxing. And it's quite simple. Let's do another example just to help drive the point home. Does this make sense? I can't see anyone's comments. So maybe Christian, you can ask if people say this makes sense, or if it's confusing.
No, I think I would like to get a comment in, because I think Jeppe needs a little bit clarification here. I think you may have explained this, but I would like to ask it anyway, because he's saying when you're looking at the data, it's historical data, the buy zone and the sell zone. So what do you use it for? I feel like you may have answered this question already, but maybe you could, because Stefan is also finding it confusing. So maybe you could say a little bit more about that. You're looking at historical data, but you could still use it to actually take the trades that we have been taking. So the trade that Sarit is discussing here is actually a trade that we sent out day trader DK, and it's actually used to find, or actually, I should let you answer the question, Sarit. Can you elaborate or explain this a little bit more?
Sure. I mean, you have two types of traders. You have the chart analyst, the technical analyst, and you actually have a few different kinds. You have the technical analyst, the guy who reads the charts. You have the economist who reads the economy. Then you have the algo guy who tries to create quantitative models to analyze. Essentially, he's turning price data into maths and into a math problem and solving it via an algorithm. Okay, and this is kind of extreme technical analysis where you're not looking at Bollinger Bands or moving averages or oscillators or anything else. You're only reading price data. And while price data, a price chart like this one, this is a lagging indicator in that it's already happened. I mean, we can't see what's going to happen. We can only see what has already happened. And so you almost have to take this chart and you almost have to turn it into a negative so that you can see where like the opposite of what you can actually see, because this is showing us what has already happened. But what we can use this for is that we can use this price data to show us what has happened. We can use this price data to show us where we had attractive buy prices and sell prices for the asset that we're looking at. Okay, and this is the pound American dollar. And historically, for a period of time, this is very short term, this is a 4-hour chart. I mean, this was a price level that was respected for a pretty decent period of time, since the 24th of February until, well, today-ish. Okay, so we had, this is a really interesting price pattern. And when you have price bars going up and rejecting, this is showing us something about price sensitivity at these levels. When price turns around like that, this is a 4-hour chart. That's a pretty major time frame. Okay, if you go to the weekly chart, I mean, if price goes up here and goes down, I mean, that's huge. That's enormous. So we have a pretty good feeling that when price moves above these highs in the future, there's a pretty good likelihood the price is going to have a reaction. And so while it has already happened, we can use this information to help us understand probable outcomes to price movement in the future. Okay, and this is what buy and sell zone theory is all about. Well, that's what I called it, at least, buy and sell zone. Supply and demand. That's another way you can refer to it as supply and demand, where you have the supply of an asset in the marketplace, and then you have the demand of the speculants, the market participants in the market who are after this supply. Okay, and this can either be in balance, like we can see here. And this is very, very balanced, very efficient trading where price, okay, not that big, but when price goes up here, it comes down, and you have a move, the origin of move goes up to here, price comes back down to the origin of the move. Price goes back up to the origin of this move, it goes back down to the origin of this move. This is efficient trading. This is very, very efficient, very clean trading. So when you have stuff like this happening, I mean, this is inefficient. You think, well, why the hell did that happen? Well, that's because there are a lot of people selling here. And that's really nice information to have up your sleeve if you're looking to earn money trading. And you can see that price left here very quickly, and price tried to come back to that area, but it failed. This is another thing I like to do is when we had a release point like this is the origin of this move. Okay, since the bar that left this area of distribution was established, once price left, price has not been back to it since. Okay, so this is the fresh, untested area of supply. Okay, and price has actually only managed to come up to this area before. Okay, so this is telling us that, wow, price is having a really difficult time coming back up to the origin of the move, and that's because there's a lot of selling still. Price tested, we fail, we try again, we fail, we fail lower, and we start to form these lower lows and lower highs, and then we have another go and we fail. Okay, and so essentially, yes, we are looking at historical data, but this historical data it's telling a story of how market participants, buyers and sellers, are interacting with each other and at which prices. Okay, we had an extreme imbalance here. Okay, we have very efficient trading here. We have an inefficient move here. What does that mean? Well, that means that price will probably rebalance. You know, when you have price left, it rebalanced, it left, it rebalanced this, it went back up, it rebalanced this. Price came back down to here, it rebalanced this. Price left, it came back down, rebalanced it, went back up to this one, rebalanced this move, rebalanced this move. Price is always trying to seek equilibrium, to seek value, and to rebalance price inefficiencies. Okay, and so when you see something like this, when I think, wow, price is probably going to get there at some stage in the not so distant future, okay, and I want to be selling there. When price goes up like that, this is an inefficient move similar to this one, and so I have a pretty good feeling that price is going to come back down to here somewhere. Okay. Right, I hope that helped answer the question. If you can have a look, Christian, at what this gentleman says.
Yeah, I hope it was clear to Jeppe. He says thanks, so I think it was clear. Carsten is asking if I can put in another question here. If you can tell us how or show us how the software finds the sell and buy zone. And I think maybe if you can explain, I think that the algorithm looks at three factors as far as I know, but maybe you could explain
Sure.
how yeah.
So what it's doing is it's looking at like the structure of price moves. I mean, the reason it like this one here is because when price left here, it left quickly in a very short amount of time, and when it left, it consumed opposing demand. Okay, we had demand, it was tested, price came up. This is the origin of this move. When price left here, we removed this demand. So that qualified, well, that was one of the reasons that it qualified this one. It also left very quickly, and it traveled from this area down to here in about 16 hours or so, which is, excuse me, which is pretty fast. So it's looking for those things. It's looking for consumption of opposing areas. It's looking for, it wants it to move quickly, and it wants it to move far. So those are the primary parameters. And it's also looking at the structure of the accumulation and distribution. So it's looking at how this is formed, if it's formed in a way that's attractive. And then I have like a checklist where you can go through and you can qualify these areas based on how they were formed. Okay, this is nicely formed. This is this is also decent formed. But there are some areas that are not very interesting, like this one here. This is not very nicely formed. Why? Because 1, 2, 3, 4, 5. Okay, price did not move above this area. It didn't trade. It didn't close above that high. And there's a lot of trading, a lot of wicks going up and down. And when this whole going up and down, as we mentioned earlier, removes liquidity both above and below price. And we don't want that. We don't want that. We want very clear, strong moves like this one, how price went up, and these bars have very small wicks. That means it's very tight, you know, it's very tight. And so price isn't able to kind of show these price, it's not able to show volatile price movements. So we have small wicks in these areas. That's a good sign generally. And if we have a big wick like this one, well, that means that we have something that looks like this inside this wick. And we know that because price tested it right there. And so I'd, as you say in Danish, I'd eat my hat if that pattern did not exist in here. And I'm convinced, and I'm 99% sure that a pattern like this exists in this wick here on the smaller time frame. Yeah, so those are the main qualification rules for it. I have a list somewhere in my files that help to qualify these areas manually. All right. Is there anything else we should run through?
There was a question that was posed. There was actually a bit before that. Let me see who it was. I think it was Lasse who asked Would you move the stop loss in some situations? Like let's just take this trade as an example. This is clearly a winning trade so far, and we are very profitable in this trade. The other trade is actually already closed, and it was a winning trade, but now we have a trade which is quite profitable. Would you, in that case, move the stop loss somewhere to secure profit, or to make the potential losses smaller?
I would. I once had this belief that you shouldn't fiddle with trades, and I still have that belief, but I've learned, due to losing quite a lot of money trading, that if my trade is in a pretty decent degree of profit, I would be a fool to let that trade go and stop me out at a full stop. And so, I mean, this has already been moved. I've already moved the stop here. And so, yeah, to answer your question, yes, I do move my stops. My old mentor would probably slap my hand for doing it, but I can go to bed at night knowing that this one will only lose 44 euros instead of, what was it before? It's the 4-hour chart, so we were above this area here. I think we're about, maybe we're around here, maybe 240 euros. So I saved like 200 euros by moving the stop down here. And due to the fact that, I mean, price has already, it's already done this this liquidity exploration pattern where we rallied price higher, the smart money squared up their positions, and then price sold off. Well, then it's very unlikely that we're going to continue moving higher if this trade is to work out. And so then we're going to start focusing on areas of supply that are closer to price to move our stops close to. And if we look here, again, we always have to do this correctly, where we had price testing this area here, which means there's probably something in here. If we look on the 5-minute or even the 1-minute, we can probably find it. Let's have a look. That's a lot of nested areas, but this one came down and went like that. So we could say that this is a very small area. We had something like that. I'm just going to enable the rectangles again quickly. Okay, so now it's going to grab that. Now we'll be able to see that once that goes to the right, it's probably, here it is. So tested, price went through it, boom, it's gone. Okay, and price came out, we tested again, but price didn't manage to close below it. We came back, and then we came down, and now we finally managed to move. So I would then feel comfortable moving, or finding this area here. We had a test here, a low, price left. So this is an interesting area now. So I'd feel comfortable doing something like that, putting my stop around here. But you have to be careful, because now we're at a session, and so the spreads widen up, so you can actually get spreaded out during inactive market sessions, or when you're out of session. During Asia, for example, the spreads widen, and if my stop is, let's say, like this, like 10 pips, I mean, spreads can easily go to 10 pips during Asia or between sessions, and so the growing of the spread is enough for me to get stopped out. So even if the trade is down here, it's not even close to here, the spread brings the price up to my stop, then I get stopped out, and that would be a real shame. And so if you're holding positions overnight, you have to be a little bit careful about moving the stop too close, because you can get spreaded out. But yes, I do, to answer your question, I do move my stop. I've started to. All right.
Okay, me is asking if this list you were talking about, if this is something you'd like to share. First of all, I would like to say that actually one of the lessons we wrote does have 3 of the most important things that I think the algorithm is looking at. I think we wrote this in lesson number 9, but back to the question, would you like to share the list, or would you just like, I think you mentioned most of the points anyway, Sarit.
Yeah, I mentioned most of them, but I'd be thrilled to share anything you guys would like to see, of course.
And maybe I could comment that anyone that's listening to this webinar is actually entitled to the trial version of the indicator, so you will actually be able to see those boxes on your chart. And also, if you're interested in going more into to detail with this, you can go to pipnotic.com and see what Sarit has built up and test more of the indicators.
Definitely.
Yeah.
Good. Are there any more questions we should take now before we carry on, or are we?
Let me see. I think there was one, but I'm not sure if we can take that now because Tina was asking you to go over the buy and sell lines you put in the last webinar. But I think you're going over some of the same things now, aren't you?
Sure. Yeah. I mean, I can. I'd be thrilled to do that. I can do a few more examples, Tina. That'd be a pleasure.
Okay.
Okay. Good. So I'll just continue on. Then we get to the end, then I can go through and we can do another fresh example. Okay, so we covered the concept of boxing. Does that make clear? It's really simple. And if it's complicated, then you're overcomplicating it. It really isn't rocket science. I'm just going to do one more example. Take anything. What should we look at? Should we look at the I don't know. Let's look at I don't know, the Aussie franc. But you can do it on anything. We can also take something else. If there's something else that someone wants to have a look at, then we can have a look at another symbol. We can have a look at gold or
Bitcoin, perhaps.
Bitcoin. We can have a look at Bitcoin. Bitcoin. All right.
I know you are trading crypto, Sarit, so that's why I'm asking.
Yeah. Yeah, definitely. Yeah. Actually, on the Pipnotic website, if you go to the the dashboards link, there's an asset strength table, and it's been screaming sell Bitcoin for quite a while now, and you can see why. I mean, it's very high, and we gapped down here, and now we kind of revisited that area. And so if we do our supply and demand analysis here, then you can kind of see that's a bit of a messy chart. Let's do something a little less volatile. Okay, so let's do the buy and sell zone analysis for this, the daily chart on Bitcoin, the USD. And I'm using a bigger time frame because the smaller time frames are quite difficult to get a hand on because it's going all over the place all the time. So we'll have a look at this. I can already see where I would like to buy Bitcoin. And that is, let me zoom in a little here. And that is just here. And that is because we had this area here, price came up, we tested it, the buy zone was established, we went deeper, almost went through it, but we held, price went above, and we started to test. You see these wicks testing this area here. This is a parent, this is a child, this is an even younger sibling, so price left, we tested, the slingshot was pulled back, we came down, we formed a continuation pattern, which is a child as it was formed as a result of this one, and price left. Price rallied, and which one removed all of these areas here? This one just here. I can't believe mosquitoes are already here. Okay, so this is the area right here. This is a beautiful release. That is such a beautiful pattern right there. And so this is, price Bitcoin is high, then it started to break down. I was a little bit tired. We tried to go, and this is a move of conviction. And notice as well, ever since this bar was formed, price has not been back. It's black all the way over. And so this is fresh, untested demand. So this would be a very attractive price to buy Bitcoin. That's below price. Let's have a look at where price currently is. Okay, so this is kind of messy. So we have this little area here, price went up, we tested it. So this is the buy zone. Maybe it's actually clear on the 4-hour chart because I think there's a lot of ugly price action there. Okay, so this is that area that we just marked off. Okay, here it is on the 4-hour. 4-hour tested, remove. So somewhere around here. Okay, so this is the one that did it. We had this little area here, this continuation pattern. Price went up, we came down, so we tested this one here, a little one there. Okay, and then price left, we moved above this high, the slingshot was pulled back. They're finding a buy zone here. Price tested the buy zone. We went a little bit deeper. This is the whole, like the analogy with the pancakes, the fork. You know, if this is a plate of pancakes just here, and the stack goes from the bottom to the top, and if a fork comes down, the fork will touch the first pancake and take the first pancake from the stack. But if another fork comes and wants the next pancake, it's going to have to go a little bit deeper. Okay, so this is what you can see here. The first pancake was taken, the second pancake was taken, the third pancake was taken, and then we got really close to the actual demand just here. Now price is still respecting that area. And then we had the same thing happen here where we had pancakes up here. We had pools of liquidity in here, so we had people who were looking to sell. This is supply. We removed this area here. Price tested it, so the buy zone, sorry, the sell zone was here. Let me zoom in a little. It was here, and it was here, and then it went deeper, and then it was removed. Okay, so this area was removed by what? By this one right there. So we take the box and we move it over here. Okay, this is where it is. This is where we buy. Boom, price comes to it. And during that period, we had the buy zone was established. Here it is. Price goes down. We go down a little bit, and then we move into it. And here we have divergence. How you have lower lows, but if you have an oscillator, you'll probably see the opposite thing happening. You'll see like a different direction playing out at this area here. Price goes up. So I'll move this one. This is gone. This one is still playing out. But notice here that price comes down here. It comes up here and it moves down here. But this is very ugly here. You can see how there's a lot of testing. Price coming down, testing, coming down. This is a very efficient trading. So there's not a lot of an imbalance there. The only imbalance that we can see is the one just here. And here we have a weekend gap or whatever. And so we have the low here, buy zone, tested, tested, tested. So this is the area. This is a demand. It's really ugly, these weekend gaps. Okay, so price came to it, tested it. We didn't manage to hold through, but where did it come from? Here it is. So price was able to move through this area from just here. See, actually, sorry, this one here. Price came back, we moved back into there, and then we left. So this one is gone, the area that removed it. There's this one here. Tested once, twice, 3 times, it's gone. What area moved through it? I mean, the origin of it is down here. Price tested it. Okay, and so now this one, tested, 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 and it looks like it's probably going to go. This one was formed, price tested it. We moved through it, the area that removed it. Oops, I'm just going to turn on my accumulation distribution bars. It makes it a lot easier. Oops, that's why. Okay, so here we can see right there. Right there. See that white candle just here? Price went through it. Price came here. Tested, now it's going down. Okay, and so the big question is, where's it going to go to? Price went down to that, so this one's actually gone. And we don't have any demand until down here, and then down here. But price is looking like, you have to ask yourself the question, where would price easiest go to? Sorry, changing. Oops, sorry. Just trying to get to the right zoom. There we are. I want to see as much data as possible. So we have this here. But price has already been to these price points here. You want to look for these strong moves like you can see here. And each time price pulls back, it's telling you that price has already been to this level. So this is not an attractive price. no longer. It's come down, but everything's already rebalanced. We could go back up to here and close this weekend gap. And did we get there? We got close. We got to the flip side of this demand, where this is the absolute high. Wow, 64,700. That's insane. It went all the way up there and then it left, but it didn't leave quickly, did it? It didn't like come shooting down. So people are pretty keen about paying this much money for Bitcoin still. And so price is coming down. We tested this one here. It's been removed, but we haven't really been back to the origin here. It's difficult to see on a different price chart would see, but there's something in here I can't see because it's all ugly because of the weekend gap. The price hasn't been back up there just yet. So this would be an interesting area to short. I don't know if we're going to get there. It looks like we're looking to break down further. But I would be keen around here. If we go into the hourly chart, maybe we can see a little bit more clarity. Yeah, see this? I don't like this when price goes up like that and then it breaks away. This, I don't like this that much. I'd feel a little bit, I mean, it looks nice on the daily chart. Sure, you can see that. But when you study this here, it seems a little bit ugly, a little bit, the price has gone up and down, efficient trading, like you can see here. So there's not an imbalance here. And so price may or may not stop here. It's difficult to say. But yeah, but it's the constant process of finding an area and working back from it. Let's do another example. Let me remove these. Okay, and then we're going to just try something else. Let's do, I don't know, the pound yen. Okay. Let me remove some of these things. Okay. So what are we doing here? So how do we know what's going to happen and where? We have to look for an area that was respected by price historically and then was no longer respected. And you can see that right here. We had test, and this is where it came from. What does that mean? That means that we'll probably see buying from here somewhere. Okay, so from around here, price will probably start to move higher. We need to go to the bigger time frame. We'll go to the 4 hour and see if that makes sense. Yeah, that looks pretty good on the 4 hour as well. And on the daily, oops, sorry. On the daily, it looks the same. See, and when price left here, we moved above here. Okay, so we had, I mean, you have to find an area to start with, and you have to move your analysis from that. Okay, so if we look at this, let's just take this area here. This is a high point. Okay, price was here. When price left here, we moved below that. Okay, price came up to here. Now it's been removed by this one. Now this one has been removed by which one? By this one. This candle, they're all related. This is a low of the box right here. This is where we'd expect price to slow down. It came to it and then it broke away. Now this one is gone. Which area did it? This one did. So this is where you would buy. And this is not even taking consideration buy and sell zone. This is pure supply and demand analysis. Okay. And now knowing that, then you can go down to the smaller time frames and identify buy zones. And we have a 4 hour demand continuation pattern here. Okay. And here we have some wicks just here. This tells us that we have demand here that's been tested once. Okay, so the software found that nicely. So price left, the buy zone for that area was initially here. Tested, price went down, we rejected, and now price wriggled higher from there. Okay, so we would expect price to move through that. Once price moves through an area like it did this one here, once the box is dotted, that means that it's weaker than an undotted box, because this is telling us that we have an untested area, okay, which we can see just here. Okay, and so this one's been tested, so it's probably or likely not going to hold too many more times in the future. And the reason you know that is because the last test went almost all the way through it. So we only have about 25% of liquidity available in this area. Okay, now it's gone. Okay, and so when that happens, you got to look lower. We have this one here. And once that one has been tested, then you have to look lower. And we have this one here, and this one overlaps very nicely with this daily area. What I've actually built into this software is the ability to see multiple time frames on the same chart. Multiple, I can go like 0, 1, 2. Then I'll see like more than one time frame on the same chart, so I can zoom out like this, and all of a sudden it'll flick on a bunch of different ones. See, and here we can see this is the daily area. It lines up really nicely with this hourly area, so I would be quite comfortable buying at this one because I know there's a daily one just below. Okay, and that gives confidence because I know we have a nice overlap of these areas. But it's just really important when you start your analysis, you find a really nice area, and it doesn't have to be a perfect area. It just has to be, it can be a high or a low, like a major high or a major low. And here we have a high, mark it off, and you see, did price move beyond it? Yes, it did. Then what area moved it? Well, something here did. See, price tested it, we came down, we kind of tested. This doesn't look like a proper area because price isn't, the behavior of the price towards this area doesn't look like an area of supply. And so I wouldn't continue with this one. This one looks better because we had that nice sell zone, the slingshot. Now it's gone. The rally through the area originated from here. It was tested. Now this is the one that caused price to go through it. Okay, can you see how I'm doing this? And we have this one here. It's been tested, tested, tested. What area did it? Oh, something down in here. We'll just box off the whole area, this area here. It's been tested a few times, now it's gone. What area did it? I don't know, let's say something like that. But this is an ugly area because there's a lot of trading in around here, so liquidity is thinned down. So you might want to look higher. Where do we have a strong move above that? We have that here. The software is telling us to look higher. It's actually not telling us to look there, so we'd look up here. Tested, removed. We have this one here. This is removed. Which one did it? This one here did. Is it still valid? It's not. Which one did it? Well, something in here, which takes us exactly to where we need to be. So this is how you do it. Mark off a nice area and just walk forward in time and find the area of supply and demand is responsible for consuming all of the previous areas that you've managed to walk through. All right. What do you reckon? Are there any more questions?
Yeah, we actually have
kind of go down a bit of a rabbit hole sometimes, and I apologize for that. But I hope that that these examples help with the understanding of.
Yes.
I know some of the stuff can be a little bit complex initially, but it gets easy quickly. This is interesting because if you go to the weekly chart and you can see this, I mean, there's absolutely nothing, no historical data is telling us why price should be going, but we are. I mean, we're so very high. If you go to the daily chart and you can see, I've already looked at this chart today, and you can see this is the big Corona crash, and then the Fed started to buy the stock market with printed money. And so, I mean, you look at this chart and you think, how is this even possible? You have like the S&P 500 in the US is going up and the economy's falling to pieces. It's nothing but printed money and stimulus. It's like, I mean, this has to end bad. And maybe this could be the beginning of this badness. But we do have this area of daily demand we have to work through before we know what's going to happen. Because this could hold and the price of this could continue moving higher. We don't know. But we've broken this trend line. See, this full candle will likely close below this trend line. That's a pretty big deal. And when that happens, well, then we know that we have market structure failing. And so the price of this asset is no longer being supported in the way that it was. Okay, and this is the daily chart, so that's kind of a big deal. And you can see that, I mean, price is already starting to do the same thing on the weekly. And so, yeah, it'd be interesting to see what happens with the S&P over the coming weeks, maybe even next week. But we do have this area here, and this is an interesting area because, excuse me, how price tested this area. Price sensitivity, sell zone. Oh, we rallied, we accumulated, poof, and we popped. So, well, there's still interest to buy. But then you ask me, who's buying? I don't know who's buying. So yeah, there's lots of interesting things to look at. We can also look at some commodities.
Sarit, can you hear me?
For a long time. Let's find a commodity.
Excuse me, Sarit, can you hear me?
Wheat. That's not a commodity that you look at very often. But the exact same, the software works on it. Exact same. It's exact same theory. Okay, so if we have the day, we have to look at this. Put the 4-hour on. First of all, let's have a look at this on the daily chart. I mean, price is really being supported. Our price is forming these. We had a huge move higher. We had this. This is the sell zone right here. It's been removed. What I removed it. This one here did. There's something in here. That's why I want to go and look on that in a smaller time frame. We'll go have a look on the 4-hour. You can see pretty clearly the price rallied up. This is pretty messy. Again, we have the efficient trading up to that area and then the pop. So I'd be a little bit cautious about buying there. But it did occur here how price kind of came up, popped, rallied, the slingshots pulled back, and then we went north. So we do have the beginning of the buy zone from just around here, just above the 66, so the 663.91, so the 664. And on the weekly, I mean, I don't even have enough data, but you can see the software is telling us as well. We have these high price move through. We had this high that was tested once, twice. Price rallied, accumulated, and we went north. Buy, load the boat at this area here. This is a really big area. We also have an upward sloping trend line, so market structure is supporting the continuation of flows into wheat. And so this would be a very interesting area to buy it. Okay. All right, Christian, how are we doing? I wish I could see everybody's. Okay. I think.
Yeah.
Christian, you there?
I think. Yeah. Can you hear me, Sarit? You can't hear me, I think. Can anyone else hear me? I think maybe the audience can still hear me. I'm sorry for this inconvenience.
Unfortunately, I'll just keep going. Let's see. Let's find. Here's another example. This is interesting. This is on the wheat on the smaller time frame where we had this nice continuation pattern. Let's see. First of all, I need to know what this removed, and so I have to mark that off and then scroll so I can see if there's anything that it moved. And there's nothing. There's nothing. So this is uncharted territory. So this is a fresh area. Price went up. The beginning of the buy zone is just at the lows here. Price tested it several times, but we have not poked into this area here. We're just kind of trading between this area here and this area down here. So we'd expect price to continue to stay between this area of supply and this area of demand until it doesn't. And when that happens, well, then we know what to do. We know if price moves below this, then we have to find the area that removed it. If price moves above this, then you have to find the area of demand that removed that. And this is where the trade takes place. Okay. Okay, let's have a look at the Aussie, Japanese yen. I'll do the same thing. You can do this. We can even do this on the let's say on the 5-minute chart. Okay, it's the same thing. Or the 50-minute. We need to see some swings. Okay, here we are. So if I zoom out a little. Okay, so do the same thing here Oh, that's a lovely area right there where we had this here, tested, removed. The area that removed it is up here. The sell zone is right there. The price has not been back there, so that would be a very interesting area to sell at. That's the 85.50 area. Just a nice, again, from the release, there's black space, completely untested. Price has only managed to make it back to this area here. So this would be an interesting area. This is a pretty big gap between the sell zone and the actual supply. So price could easily come back up to here and continue moving lower. We had the same thing here where we had half an hour demand. It was tested and consumed by this half an hour supply and 1 hour supply. Price left. The trade took place right there. The software told us about this trade when these candles, one of these candles down here closed and it went back up. So we had plenty of time to plan this trade and wait for it to unfold nicely. Okay. Good. All right, Christian. I wonder if there are any questions. I've been rambling on here now for lots and lots of time. Let me see if I can write a message to Christian.
Yeah, Sarit, I think you cannot hear me, but so this is kind of a comical situation. I hope you see my message on Skype, but I actually want to round this up now. There were more questions, but I think we're going to take them next time around. Yeah, I'm going to round up the webinar now, Sarit, but I'm sorry you can't hear me.
I can. I had the blasted mute button pressed. I apologize.
Oh, okay. So
sorry.
Yeah, I've been trying to talk to you. That's a bit of a comical situation, but anyway, Sarit, I think we have overstepped the time now. So I think we'll just gather the questions and maybe take them next time, because we actually had more questions, but I'm just going to make a note of it. So let's do it like that. Many people have told me on the chat that they enjoyed it very much, and I hope that this technical issue didn't disturb you too much, because I know that the audience could hear us both, and that may have been a bit of a comical situation. Anyway, towards writing super webinars, so and several people are writing positively back. So
excellent.
I'm sorry about this disturbance.
Sorry about that.
Thank you very much, Sarit. That was really interesting, and I think we got covered a lot. And I'll just collect the questions.